All right, everyone, welcome back for the episode of This Week in Charts via Carnival Trades and Wall Street for Main Street. If you've not done so already, please give the video a thumbs up. Don't forget to like, comment, and subscribe to the channel. Come find Jason on Patreon, and come find me on carnivaltrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week. So we had a massive sell-off here on Friday, and we may be looking at a carry trade unwind here. So this is something that I pointed out on my channel, just a quick plug here, yesterday. And right here, carry trade, yen set to explode. And the reason I said that is because US dollar versus the yen started to break down yesterday below that 152 area, which is a key pivot point. You can see here on the charts clearly that was the previous high, and we did break below that. And this kind of went under the radar for a lot of people. A lot of people were blaming, well, first of all, yesterday, kind of just put the warning out there that this is going to be a problem. And a lot of people today were saying like, oh, it's because that's the new XYZ, let's call it a sickness, if you guys know what I'm talking about, out of China. They're talking about weakened economic growth. It's not, it has nothing to do with that. It's the USD JPY, and I'll show you right here. So Norinchukin CEO resigning after massive bond losses. This could cause margin selling over the weekend. This is problematic. Pointed this out yesterday. The reason that really tipped me off was banks. JP Morgan taking a huge hit, down 4% in one day. That is not normal for JPM. Goldman, Morgan Stanley. Look at the KRE regional banks here. Lower highs now confirmed. We've wiped that whole formation out. XLF, a head and shoulder here on the 4-hour. And broker dealers, the strongest, strongest index there is. This now has a rolling top, an outside move there. So very dangerous here. I pointed out left tail risk yesterday, and honestly, humbly, this is one of my better calls in a while, as I was able to maneuver out of that and buy some volatility, which ended up being a godsend here as the market took a big spill here today. Spiders down 1.7. We got triple Qs down 2.08. Get rid of these old lines here. Either way, big outside move. And then take a look at the Dow. Failed bull pennant, and the Russell RTY failed bull flag here. So you have a nice bull inside bar, never failed, never failed, never failed, and then it failed today. So very ugly move here across the board. In fact, look at the Russell futures. This morning they were up 50 basis points. So look at that rally in the pre-market, and then just a massive dump. It didn't help that we had economic data that was not good. Bonds rallying. I think they're rallying for another reason, but yeah, just it's probably too late now by the time you're seeing this video, but there is some tail risk here into the weekend for sure. So I would love to give you levels like I normally do, but we have to see how Sunday night futures open. It could be a nothing burger. There's always that possibility, especially when you're talking about left tail risk, because I mean it's such a low probability event. However, earlier this week I alerted people to call buying in the VIX. That was unusual. And just seeing how the banks responded yesterday, seeing the yen, and the fact that no one, at least in financial media, is talking about this. They're just harping about economic data. It leads me to believe somebody knew something, and we're going to get news over the weekend. If we don't, then nothing happens, and we'll just see. 6,000 SPX I guess could hold. We close right on the 50-day, so it's not like the chart is the worst here. I mean, who knows? Maybe we go down to this trend line and then we just bounce back up. It's certainly possible. But the thing I fear for here is that we had a gap down a month ago. It got bought. We had a gap down on Monday a month ago. It got bought. We had a gap down a week ago on a Monday. It got bought. If they gap us down on Monday, I think everybody's going to rush to buy the dip, which could create a sell-off, a continued sell-off. Feb OPEX, going to a March OPEX cycle. There's also another big cycle in play here that I've calculated myself. So we'll see. Yeah, and this is a week where we closed at all-time highs 2 days ago. So definitely some weakness here, and we'll see what happens. Again, I'd love to give you levels here, but I'll just say right now 6,000 is a bull bear line on SPX. you know, and you got this trend line here, but you've hit it 3 times now, so this can break. So Monday's open will tell us a lot more. If if it ends up being a nothing burger, it could just be a liquidity grab, which we've seen plenty of times before. But definitely some tail risk out there, and so far definitely feels pretty good to have cleaned the book up this week and bought some volatility beforehand. QQQ here, outside move again into a double top. So not only did it fail to break out, but you wiped out the last like 5 days of trading. So QQQ with a nice outside move there. Good reversal on the weekly as well. IWM is very ugly, not good. A lot of banks here, a lot of regional banks in this too. So closing below the 200 move average, right? So we've tested it a few times, but we just closed below it. Dow we talked about, there will be some support at 430. So, but again, trend line has been hit 4 times. Well, it will have been hit 4 times. So be careful with it. SMH down 3%. Again, tech, not a good place to be if there's a carry trade unwind. IGV, even my favorite. I actually got stopped out of this. Very small loss, only $1. But big outside move, down 3.4%. So now I'm looking at a lower high possibly. Doesn't mean it can't firm up, but you just wiped out 2 weeks worth of trading here. Transport's also very ugly. The good thing is you have somehow you still have higher lows here for the transport, so that's the positive. And they did, look at that, they tried to get us above 16.6 earlier this week, and they did. And then, boom, big outside move again. It's still holding that green bar, though, but it's inside of the big red, which I don't like. Transport's trying to hang in there. For interest rates here, I just want to look at TLT quick. I told you guys, watch $90. Not a coincidence, it's coming back there. If it gets through this, it's going to 93. So interest rates here, obviously down on the day with some fear there. You can see the 2-year down. That's not a bad thing. If the 2s can come down a little bit, that gives the Fed breathing room. Obviously you don't want to see them go down too fast because then that could also be a bad thing. But, the Fed gets some breathing room. 5s and then 10s and 30s still have kind of this higher low here. But yeah, rates coming down here. Also, XHB, we've been talking about this, has not been strong lately. And this had look, it gapped up. It gapped up it really nicely today. And that's ugly. That's ugly. Close below that green too. Not good. So next support is 97. I don't even know if I'd be a buyer there just because I don't like that weekly failure. I have to see the rest of the market. I'll say VNQ though, this still remains strong. It was down today, but you closed above yesterday's low. It had taped where you had every excuse to not do that. So VNQ still holding up. Big time frame though, bigger picture, you're still got that bear kind of wedge look, but relatively speaking, it's holding up pretty nicely. Talked about banks there, broker dealers rolling over too. Oil down a lot. So I want to draw your attention to this too. XLU green, TLT green, XLP green, oil red, and outside of UNH, they had news today, XLV would have been green if it wasn't for that. What does that typically set up to you? What does that mean? Also, small caps down. What type of configuration is that? Everyone should know that that's kind of like the economic slowdown configuration. Transport's down big. So there is possibly slowdown fears, but I think it's a little bit more than that. But that is still the case nonetheless. Oil down. I would love it to just puke out and wash out so I can buy it finally, but it's been in a range. Just say right now there might be some support at 68 or 66.50. XLE held up. Yeah, it was down 2%, but honestly, not the worst. Not the worst day. I think XLE could be a little defensive too, especially when tech sells. XOP and OIH both down as well. I have not played these, but I think XLE is a little bit stronger. I know XLE is stronger. Uranium plays down as well. CCJ, we talked about this inside bar. Said, watch out, be careful. And M and NJ, new 52-week lows. Or NJ is very close. NUKZ, down as well. A lot of liquidity coming out. Still in an uptrend for now, but definitely a good slice. Nat gas up 2.7%. I think this can go to $5. I think it probably does, honestly. Maybe even higher. So Europe is out of that Russia deal, and we've got some cold season here. Let me check the J, actually. J's up a little bit less, but it looks really strong. So I think there's some staying power to this, maybe. We'll see. Dollar was green today. Held the 100 moving average, but it did lose 107 on the weekly close. And it looks like it closed right on the 20-week moving average. We'll just give it the benefit of the doubt there. But the story is obviously in the yen, right? So the dollar being green, it means the euro is just down. The yen's, the dollar's losing versus the gold holding up as expected. I'll say though, if we do have tail risk, this probably will slice down, but it'll bottom before everything else. So, and if we slice down enough, that means the Fed will have to put liquidity in the system, which is even better. So, I did an article on this last week. I have a new target, 30.76 on gold futures, just so you know. And I expect that to get hit soon. Silver down here. This will take a little bit bigger of a hit if we have more selling, but it'll still, I think it's still going to 38. Platinum and palladium, a little bit weaker. I'm more neutral on these now. So I did close out my Sprott here earlier, and for a gain, but I don't like how they looked into the weekend, so I'd rather just de-risk there. Copper down today as well. Really red all week, pretty much. And we told you that 4.8 would be resistance. It was. It's not broken though. It's just pulling back right now. So 440 to 450, it could see it getting a bounce there, and then we'll evaluate it from there. Bitcoin down 3%. I'll say this, especially for bulls, like this isn't down that much, really. I mean, like for the NASDAQ to be down 2%, Bitcoin should be down a lot more. And it's still within range here. Again, the weekly chart is still very much fine. No problems here. But we'll see. We'll see how long that lasts. The other thing too is this up right now because we have Forex problems and there's people moving money? That's possible because the alts were not good today. ETH down, had a chance to get above 28, couldn't. So crypto holding up. Maybe it's a sign that there's things are okay, but I don't like what the Russell did at all, and I don't like the Dow either. So never good when you see those failed patterns like that. I would say right now, yeah, I mean, 600 SPYs, 6,000 SPX, going to be a point of control here. And again, I would love to just give you the magical level and say, this is where you're going to buy the dip. But right now, I need to see the Sunday night open, and I need to see how this trades Monday to know if this is for real or not. Because if it's real, it could get way uglier than you think. And I don't think dealers are going to come save this market until March OPEX, honestly, which is a month from now. So anyways, leaving on a high note. All right, I'll wrap it up here. Again, you guys take care. Come find Jason on Patreon. Come find me on carnivaltrades.com. I'll see you guys all next week.